one of our equity investors, had a very tight, what I call chain of provenance. And what they were doing is they are acquiring these oil and gas wells in Alberta. You can buy these wells cheap, like 1.5 times price to free cash flow. You can't find them in public markets. And the reason why these oil and gas wells are cheap is because Canada has been hostile to oil and gas for the last 12, 15 years, the Trudeau regime and a very liberal government. That's changing now. Carney's adopting conservative policy, liberal governments co-opting conservative policies. I was actually on the phone with the energy banker today. Yeah, like the central government was trying to convince us to build windmills, wind farms. We don't know what that is. We know how to get oil out of the ground and put it on a truck or natural gas in a pipeline. What's happened is a lot of capital intelligence left, went to the Permian Basin in Texas. And so anyway, these oil and gas wells, the older they get, the more natural gas content they have. The natural gas is commingled with the oil. It's absorbing the oil. Sometimes it's separated, sometimes it's separated out. So the older these wells get, the more natural gas content they have. The issue is in Canada, it's illegal to flare. Flaring is like you have a teapot on your stove, you light up the stove and you get natural gas flaring. That's what flaring is. Venting is you don't light, you just have the air come out. That's horrible for the environment. Flaring is much better for the environment, but still not as ideal as other methods. But you can't flare in Canada. So what happens is these wells, they emit too much natural gas to become a liability because you're required by the government to seal the well. You have to seal the well, which means you have to spend hundreds of thousands of dollars in remediation costs and abandonment costs and environmental protection costs. So the oil owner will sell it to you to get the future liability off their hand, even though it's catch fly. Now, one man's trash, another man's gold. This is such a clever little strategy. I love it. So the operator we work with, what they're doing is they're taking these wells that have natural gas, but these wells are stranded. They're not attached to midstream pipeline. They're stranded. No pipeline that can convey the excess natural gas and sell it on the market. It's hard to liquefy gas. You need real industrial resources to do that. So what they do is they take a generator and they combust the natural gas on site and they mine Bitcoin. How brilliant is that? So they take the natural gas, they mine Bitcoin, and two, that allows them to access the oil. They're liberating oil and they sell the oil in the open market. I think it's a brilliant strategy. So that was our last Illumina deal, by the way. We'll share with you how it plays out. It's a 22-year deal because the wells are going to last 22 years. So we expect we'll get our principal out in year 2.5, and then free cash flow for the next 22 years.